Okay, welcome back. This is part 4 where I do some analysis. Just remember this analysis is based on futures, not on CFDs. Overall trends are the same. The only difference is going to be prices. And again, if you compare what the futures are at some stage 2 or 3 times, and you do data points with what's going on CFDs versus the futures, you can sort of pretty much tweak those prices to make them work for you anyway. And just a reminder, so we've got a lot of inflation data leading up to the FOMC meeting decision this coming week, so expect some big moves, I would say. And of course, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed. And of course, CPI could swing it one way or the other. And then, of course, you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. Okay, so we're going to start with the Dow Jones as usual. So, as you can see, it was pretty much a red week, and it's coming off. Now, I've got the Fibonacci levels on here as well. So I've got trend lines. So I've got resistance at 34458, and then I've got the Fibonacci levels in there, which, they are playing a part. And any rallies, it's always the same, isn't it? If you've got a line, when the market's below, it's a resistance line. When the market's above it, it's a support line. They just change their role. So don't be too quick to take these lines off your charts. They can still have some value, especially because the market loves to retest levels. And then I've got that sort of longer term uptrend line there that hasn't been broken for the Dow yet. This could be a big week for it, especially with PCE coming out, which is the Fed's favoured inflation data. People will really focus on that. But of course, we've still got the Middle East tension there, so that's probably going to override everything at the moment. Again, just make sure you're keeping up to date with all the news that's coming out. And yeah, so if the market does come off, so the support line's at 33071, and then below that 32621, which is really a support, but if it goes through there, then that's a breakout on the downside as far as I'm concerned. Just remember, this is just my analysis. This is the way I do things and the way I look at the markets. And again, if you're interested in improving your technical analysis, come on one of my courses. I can really help you. I don't just use candlesticks, by the way. I use other charts as well. So, I mean, if we look at this chart, I mean, if you look at the pivot points, which I've got on, that solid blue line, I mean, look, Wednesday, that's in the middle of the chart. How beautiful that was. It kept getting rejected at the pivot point all day. And then, of course, the market fell away from there. And it's been falling away pretty much ever since. And of course now we ended at the lows on Friday. Well, the lows of last week, whether they're going to be the lows remains to be seen this week. So I've got a resistance level in there at 33558. Potentially that could be a breakout as well, just looking at it at the moment. And then below that I've got another resistance level at 33325 and support at 33220. Moving on to the S&P, I've got resistance level at 4446, I've got support at 42.43. Again, if it does break through these levels, then I've got a sort of a support stroke breakout level. It's really a breakout level, I would say, more than anything else though, at 40.51. Now the Fibonacci levels are on there, so just keep an eye on them, because if the market starts to have a rally, that blue line, the 382 line, is going to be a resistance level to start with. Or if it comes down a little bit further, sort of about 42, maybe 20 something, you've got the 50 Fibonacci level coming into play. And then lower down, sort of probably around about 41.20, 41.25, you got the golden ratio. That's that 618 level, which is the key level for analysts. And again, I use all these levels on a daily basis. On the 30-minute, I've managed to get quite a good support line in there, 42.42, very close to where it finished the week. So depends what happens at the start. It could break that quickly, and some of that will depend what's going on geopolitically. Resistance I've got at 43.02.50. Above that I've got 43.13 as a breakout. So if it did rally and it sort of popped through there, then for me that's a breakout on the upside. Possible, it's doubtful for me, but who knows with these markets at the moment. We've still got some more earnings to come out this week, so again that's going to have a little bit of an impact. Now Nasdaq, looking at the daily, resistance at 15.240, support at 14.578, and also 14.249, but that is a breakout should it get through there on the downside. The fibs are on there again, Fibonacci levels. Just keep an eye on them, because they will come into play. And again, you can always take a picture on your phone, or you can just screenshot these just to sort of keep these in mind. The daily is more so, obviously the 30-minute ones are going to change on a regular basis. So with the Nasdaq, I've got on the 30-minute, I've got resistance at 15.034. I've got resistance at 14.929, but that's another one of those breakout levels should it get above it. I've got resistance at 14.887, and support pretty much where it closed on Friday at 14.647, and again at 14.587. Now some of these are looking a bit vulnerable. If you look at some of the dailies for the stocks, those heads and shoulders have certainly been in play as well. Now this is the Russell 2000, and I've got resistance at 18.96, 18.35, 17.84, with support at 16.87 and 16.56. Now the really pale blue line there, for me that's the neck line of the head and shoulders, and that's why I've put that in there. So it broke through there, and the market's been coming off ever since. It did try and have a couple of rallies over the last 2 or 3 weeks, but it's never got back up anywhere close to that neckline. So they're important, so just keep an eye on those. Just make a note of it. So 18.35 becomes a fairly major level if the market can force any type of a rally. Looking at the 30-minute, I have 17.24 as resistance. That's a breakout level though, if it should get above it. I've got 17.15 as resistance, and I've got 16.87 as support. Moving on to currencies as usual. I've got resistance at 124.30 for the pound against the dollar, 122.88, with support at 1.2 really, and 1. Now, if they should have big sell-off, it's doubtful but it could. Then that 116.61 is support stroke breakout. Definitely more of a breakout level should it get through there, but that's a big ask. That's still another long way to go. But these markets, it's possible. Now, when you look at this as well, I've got the Fibonacci's on there again, and it's closed just above the 3.82 level on the fibs, so just keep an eye on those, and again just keep them around, because make a note of them, because they could become useful this week. On the 30-minute, I've got resistance at 122.01 and 121.73. I've got support at 121.40. As you can see on Friday, it rejected really nice and close to the 120.95 level, which was S1 on the fibs, and then closed up. So the dollar just weakened just slightly on Friday afternoon. The euro daily, I've got resistance at 106.36. I've got support at 104.80. And then below that, I've got support at 101.91. But again, it's one of those breakout levels should it get that low. Of course, that's a bit of a way off for the moment, for sure. But, when wars break out, anything can happen with these markets. So, we've got that downtrend line based on the daily there. The dollar's just sort of strengthened. Economically, it should be stronger. Politically, maybe that's a negative for it. And of course, it is one of those haven trades as well. Looking at the euro against the USD on the 30-minute, I have resistance at 106.65, support at 105.89, and also at 105.63. Bitcoin had a pretty strong week. I mean, it sort of broke through 30,000 again at one stage. It finished lower again, but yeah. So and there wasn't really that much in the way of news, I don't think, for crypto. I think any news hasn't been that great for crypto, really. Again, I just think it's almost become a little bit of a digital gold. Again, just remember, that's just my personal view. So when investors want to get away from maybe the banking system, as they did earlier in the year when there was a few US banks in trouble, or whether they just feel more comfortable just moving their assets away from more traditional asset classes, something like Bitcoin is possibly attractive to them. So we see that get back up to sort of a higher level above 30,000. So I've got resistance at 34,911. I've got resistance at 32.95, support at 28.138, then further support levels at 26.555 and 24.925, with 23.995 as a breakout level should it have a big move down. On the 30-minute, I've got resistance at 29.742, support at 29.410, more support lower down at 28.240, and another sort of support stroke breakout level at 27.772, and that final support all the way down at 26.555. So Now this is an interesting one for last week, because when you look at them, the lines have actually crossed. So we've seen Bitcoin getting stronger, and obviously we had that week of stocks getting weaker. So you can see that they've actually crossed again now, with crypto on its way up and stocks on their way down. So it's just if you trade sort of digital assets or stocks, then it's just good to see this sometimes. Moving on to gold, yeah, what a stellar week that had. All the way up above 2,000, finished a bit lower than 2,000, but a big move up all week. Again, it's sort of one of those risk-off trades going through. So I've got resistance at 2,043 and also 2009, and then support stroke breakout at 1921. On the 30 minutes, I've got that same resistance really, 2009. Support I've got at 1990. I've got 1982 below that, but that is a breakout should it get below there. Then support comes back in at 1957, 1947, 1931, finally 1920. But if it was to crash and get through there, then that becomes another breakout on the downside. Finally, we're going to look at oil. Again, another stronger week there, despite the fact that Venezuela, so supply is going to potentially increase. On the other side of that, supply chains could get disrupted with what's going on in the Middle East. A lot of commodities come through that area. We've got resistance at 90.75. Support at 83.40. Should it crash, then we've got a breakout level at 81.47 and another one at 77.36. But all these geopolitical issues going on at the moment, it's probably going to keep giving it a stronger undertone. It doesn't mean that it's going to go ramping up, but I'm not going to give advice, but just keep an eye on these things. Make sure you keep up to date with all the news that's coming out. If you're trading, especially day trading, intraday trading, potentially even swing trading, because this volatility is going to remain in the markets for a while. Again, if you've got those stronger, longer term views, then consider options. If you don't know how to trade them, I demystify and simplify options, and I'm doing an actual one-day workshop this week on that. If you sort of just want to learn a bit more about technical analysis or just improve your trading at all, I'm doing 2 or 3 workshops this week, so they could be useful for you. But anyway, that just leads me to say, I hope you have a great week. Just come through to the last couple of slides where we sort of discuss sort of all the services that we do have available for you. And of course, don't forget we do a daily newsletter as well. So if you haven't signed up for that, then you really should, because that is very useful as well. So anyway, okay. Hope you've enjoyed that. We'd love to get your feedback on what we provide as well. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from 1-day workshops, 1-week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly, because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And